A very good day, Professor Filza. Right now, me, Austin, and Leila will be presenting the research work that we have conducted. And unfortunately, due to some technical difficulties, I couldn't record myself, but I hope that the picture that I've put is going to substitute that. And this is our team, Austin, Leila, and myself, Arslan. The title for the research that we have conducted will be as follows: an investigation about the relationship between the stock market development and economic growth in Bahrain and Oman. So the reason why we have chosen these countries to make a research on was basically because these countries, unlike the other countries of GCC region, have not participated in any war activities and other major political issues. And this is the content of our work. I'll be introducing the work in chapter 1, and then Austin is going to talk about the literature review in chapter 2, and then the research methodology in chapter 3 is going to be presented by Leila respectively. And now I'll be talking about the financial markets. I'm going to give you the introduction about that. So the financial markets, they play a major role in enhancing economic growth through enabling the allocation and mobilization of funds from savers to lenders. And then the major financial market is the stock market, where shares and other financial instruments are traded. Going on to the next slide, I'll be giving you the more understanding about stock markets. So the stock markets, the operation, they permit access to long-term capital for businesses, companies, and other sectors of the economy, thereby increasing the number of investments, expanding production, and eventually promoting economic growth. Hence, the development of stock markets, they signal the level of economic activities in the country, and thus the level of its economic growth. These markets provide an effective way for investors to make investment choices. And now I'll be talking about the Bahrain Stock Exchange and development and economic growth. So Bahrain Stock Exchange is the first stock market established in Gulf region and has experienced a lot of success and growth with the assistance of government of Bahrain and collaboration of its stakeholders. And it was established in 1989, and then Bahrain Stock Exchange was replaced by Bahrain Bourse, which was established as shareholding company in 2010. And Bahrain Bourse has been developing to become one of the leading emerging stock markets in the Gulf region, starting from 29 listed companies in the early 1990s up to 44 companies in 2019. However, these numbers are likely to be less as compared to the other countries in Gulf regions such as Saudi Arabia and UAE. Going on to next slide, a market capitalization graph of Bahrain Bourse and the GDP of Bahrain is going to be presented. So as we can see, since its establishment, the market capitalization of companies listed on Bahrain Bourse has been increasing. But in 2008, due to financial crisis, it dropped down. And then in 2010, it started to grow up. And for regarding GDP in Bahrain, as we can see, the GDP, it has been increasing as well, accounted at 37.75 billion in 2018, which increased by 6.5% as compared to the previous year. So going on to next slide, I'm going to provide an understanding about Oman Stock Exchange and development and economic growth. So Oman stock market is called Muscat Securities. It is considered as one of the smaller exchanges in the region. However, its growth over the past 20 years has been quite steady. So the objective to establish Muscat securities market was in order to govern and systemize the securities market of Oman and impact in effective way the other institutions to create the infrastructure and the foundation of the country's financial sector. Going on to next slide, the market capitalization of MSM and then the GDP of Oman is provided. As we can see, it has been increasing as well since its establishment. And then the market capitalization of MSM at the end of 2018 accounted at 37.8 US dollars. And this amount consisted around 30% of GDP of Oman. And regarding GDP, as we all can see, been going, it has been raising up quite constantly, and then in early 2000 it managed itself to rise up rapidly, which accounted 70.25 billion US dollars at the end of 2018. And as a result, it has represented 0.11% of the world's economy. So having said all that, having highlighted all these numbers, it can be revealed that there is an opportunity and the possibility that the numbers are going to increase in the upcoming future. And that's why we have decided to make a research on these countries. So, so now I'll give the better understanding of the problem statement of our research. So basically the problem statement is the description of an issue that currently exists which needs to be addressed. It will provide the context of the research study and generate the questions which the research aims to answer. Having said that, based on the research that we have conducted, there was hardly any evidence that the stock market development strengthens or enhances economic growth in the GCC countries. And then the research done so far focused on developed countries like Belgium, Portugal, France, Netherlands, and United Kingdom, and then the developing countries like Brazil, Russia, India, China, Bangladesh, Pakistan, and some of the African countries. And then the relative studies of Oman stock market have indicated that the Oman stock market is relatively very small. And then the Bahrain stock market is not large either, because the number of the companies listed on Bahrain bourse have not even doubled since its establishment. And it was very unclear whether emerging stock markets in Bahrain and Oman can have the impact on economic growth. And these factors were investigated in our research to scan the impact of Oman's and Bahrain stock market development indicators on their economic growth. Then going on to next slide, there is a research questions and objective that we have faced. So basically the research questions, they're investigating the relationship between stock market development and economic growth and other indicators like market capitalization, turnover ratio, as well as total value traded ratio, and then all share index. And then research questions are basically stating what are those relationships between those indicators and then economic growth in Oman and Bahrain. And then for the significance of the research, so the main purpose of the research is to inform an action, to prove a theory, and contribute the developing knowledge in the study. So this study will expand a market-based theory by including those four indicators that I have mentioned earlier, and it will also fill up the gap in the literature review as well as incorporate all four indicators. And it's also as an up-to-date analytic research as it can be used as a source for the researchers who are interested in conducting research in a similar field. And then the research also will provide conclusion for policymakers. And then it will also benefit the other countries which do not have stock markets, such as Yemen and Ethiopia, as their government will recognize the importance of the stock market to the economy. So that was all from my side. Right now, I would like to pass it to Austin. He's going to talk about the literature review in chapter 2. Thank you very much for having me and paying attention.
Thank you, Aslan. So, hi, I'm Austin. I'll be presenting chapter 2, the literature review. So, first of all, I'm going to talk about is the economic growth, so which is our dependent variables. So, basically, economic growth is defined as the total goods and services produced in a certain period of time. So, one of the indicators often used for economic growth is the GDP, the growth rate of real gross domestic product. So, let's say we were to find out whether is there a growth in the economy of Malaysia between 2018 and 2019. So we'll be using GDP because it measures the country's total productions. But how do we calculate it? So we'll be calculating it in terms of the monetary values of the total goods and services produced in Malaysia in 2018 and 2019 separately, and then we compare it. So let's say that the GDP in 2018 and 2019, there's an increase in it. It shows that there's a growth in Malaysia's economic between 2018 and 2019. Next will be a theory we implement in our research. We have the underpinning theory and the complementary theory. For the underpinning theory, we'll be using the market-based theory. As for the complementary theories, will be both the solo growth model and the exogenous growth theory. So the market-based theory is actually a very basic and simplified theory, as it shows that effective and efficient markets helps to advance the economic growth, and where a healthy functioning stock market can stimulate economic growth and leads to a improvement in the corporate governance. As for the complementary theories, we have the solo growth model, whereas there's three important economic growth driver: the labor, capital, and technology. The second complementary theory will be the exogenous growth theory, which is somehow correlated to the solo growth model that I just explained just now. So I'll explain why later. But the exogenous growth theory actually basically it talks about the external factors such as trade policies, government policies, human capitals, and technologies are one of the key economic growth drivers. And the reason why I say that exogenous growth theory and the solo growth model are somehow correlated is because that under these both models and theories, they suggest that the capital and technological progress is one of the most significant theories that can enhance the economic growth only when the financial market is efficient and effective. Now, next will be the stock market development indicators. The below are the four variables that we chosen for our research: the market capitalization ratios, turnover ratios, total value traded ratios, and the all share index. For market capitalization ratios, it basically represents the size of the market stocks relative to the size of the economy. So actually it's calculated as the market capitalization divided by the GDP. In other words, basically it's the total market value of these companies on a stock market. So through our research, we found out that when the stock market size increases, the stock market means that the stock market is getting developed and will have a positive impact. And the larger the market capitalization, the better the economic growth. As next, I'll be talking about stock market liquidity. It's not in the variables of the um, indicators of stock market development, but it is a very important factors that we need to present. So basically, stock market liquidity is referred to the buying and selling ability of low-cost transactions. So the stock markets affects the economy through the liquidity, and liquidity is a very important um, factors that can affect the in the stock market development. So there's two different measurements for stock market liquidity, which is the turnover ratio and the total value traded ratio, which are somehow similar. But the reason we choose both of the ratio is due to the fact that they have different aspect of liquidity. So the turnover ratio and the total value traded ratio are both the variables that we chosen for our research, and I'll explain later. So why stock market we include stock market liquidity? So we need to explain it first. Basically, the higher the liquid stock market, it decrease the risk of investing in securities and stocks, which will attract investors and savers like us to invest it and encourage us to have participate in long-term projects. And at the end, it will enhance capital allocations and promoting long-term economic growth. So another example is most long-term projects requires a long-term commitment of capital. So however, savers and investors like us, we usually don't willing to tie up our savings for a long time. So without the liquidity in the stock markets, many profitable projects will not be undertaken. So liquidity markets allow savers like us to buy stocks and can sell it whenever we need it and whenever we want. So the more liquid markets are able firms to raise the capitals and create long-term investment, and it will enhance for economic growth. The reason why is because when companies are are able to raise capital funds easily. They are able to continuously expand and develop their projects and businesses, which at the end it will positively impact economic growth. Now the next variable will be the turnover ratio and also the total value traded ratio, which I'll explain about it. So turnover ratios measures the level of trade of domestic shares relative to the value of listed domestic shares. And the total value traded ratio measures the level of traded domestic shares as well, relative to the size of the economy. So I'll explain why right now. So basically, turnover ratios and total value traded, they have similarities, which is both measures the level of traded of domestic shares, but turnover ratios relatively to value of listed domestic shares, which is the market capitalizations, and for total value traded ratios are relative to the size of the economy, the GDP. So these are differences and the similarity for the measurements of liquidity, but a difference in the aspect of liquidity. Lastly, the last variable will be the all share index, which is used to measure the performance of the market. It represents a series of numbers which shows that the changes in the share price and the stock price. So it's usually, the reason it is significantly important to every country's capital market is because that it usually tracks the performance of the entire markets. So through our research we found out that the higher the share index, the better the market capitalizations, which have a higher measurements of the overall output of the firms for in a country. So this is the theoretical research framework. As you can see, these are the four variables: market capitalization ratio, turnover ratio, total value traded ratio, and all share index. These are the variables that can affect and indicate the stock market developments, and the stock market developments affect the economic growth as a whole. So these are the research hypotheses that we have. It shows that there's a positive relation between the market capitalization between GDP in Bahrain and Oman. There's a positive relation between turnover rate and GDP in Bahrain and Oman. There's a positive relation between total value traded ratio and GDP in Bahrain and Oman. And lastly, there's a positive relationship between all share index and GDP in Bahrain and Oman. So through our research, we found out that we found out that all of these variables have positive and significant relationship between the GDP, which is the economic growth. So I'll pass it to Laila, which she will be talking about chapter 3. Thank you.
Thank you, Austin. So now I will be talking about Chapter 3, Research Methodology. In research methodology, we will basically cover the research paradigm, research design, the data source and collection, and the data analysis method. For the research paradigm, we will follow positivism approach, which is based on a belief in objectivity and neutrality, and it depends on quantifiable observations, which leads to statistical analysis. Therefore, quantitative research approach will be used because it involves gathering data that can be examined in unbiased manner as possible. It allows testing the hypothesis for the relationship between stock market development indicators mentioned earlier and economic growth, which is a dependent variable. We will also be using descriptive and correlation designs such as multiple regression to examine the causal relationship between the dependent variable and the four independent variables. So in total, we have 5 variables, one dependent variable, which is the gross domestic product that measures economic growth, and 4 independent variables that measure stock market development. These variables were explained before in chapter 2 by Austin, along with how they are measured. So moving forward to the data collection, we will be collecting secondary data from World Bank Group database, and we will be studying the period from 1988 to 2018. This period was specifically chosen because the two stock markets of Oman and Bahrain was established within this period in 1980s, where Oman stock market was developed in 1988 and Bahrain was established in 1987. So that's why we chose 1988. Till the recent data we find until 2018. The data analysis method will be panel data techniques using a regression method. This method was used by many of the authors that we reviewed their studies to investigate the relationship between stock market development indicators and economic growth. So this is the general model that we will adopt. This model was developed by many of the studies before, and these are some of the studies that use this model. However, once reviewing the studies, we couldn't find any study that incorporated all the stock market development indicators in one study. So our contribution of this study is that we will incorporate all the models together, all the indicators together, including the all share index. All share index was used by some of the studies, however they didn't incorporate all the indicators together. Moving to the ethical consideration, this study doesn't include any participants because we will be collecting data from the World Bank database, which is all numerical data. However, we will ensure collecting relevant and authorized data, and we will avoid changing or choosing different data to get different results. We will ensure having the correct data in order to get unbiased results, and we will ensure to provide valid interpretation of the results so that in case we publish our study and other studies want to use it, they use the correct information. And okay, this is our references, some of the references that we use in the presentation. The rest is in the Word document. So thank you, and any questions?